Welcome to our webinar. Online payment fraud. Due to the convenience of technology, the number of internet transactions has grown enormously over recent years, whether through online shopping or paying for things like subscriptions or online services. It is not a surprise that a growth in e-commerce transactions would mean an increase in fraudulent activity. Online merchants have been suffering greatly from chargeback fraud, which requires them to absorb the costs of disputed credit card transactions. Firstly, let's look at the two main types of payment method. Card present is when the transaction occurs in store and cardholders present their physical card to complete a purchase. The merchant can manually verify the identity of the cardholder and validate the transaction. However, card not present is where the online fraud arises. Transactions occur online where it is difficult for merchants to verify the identity of cardholders and therefore validate a transaction. As a result, merchants are held liable for the acceptance of any fraudulent transaction. A common type of online payment fraud is identity fraud or credit card fraud. In this type of fraud, the criminal steals or obtains key details of personal information and uses them for fraudulent purchases online. Unknowingly, the merchant will process the payment and deliver the goods or services to the criminal's address. Upon seeing the fraudulent or incorrect charge, cardholders contact their issuing bank to dispute the charge, resulting in the merchant being penalized with chargeback fees, lost goods as well as revenue. Chargeback fraud, also known as friendly fraud, is very similar to identity fraud. The main difference is that in this situation, the cardholder is the one intentionally committing the payment fraud. The process is almost the same. It begins with the cardholder making an online purchase with their own credit card, followed by the online seller processing the payment and delivering goods to the customer. Although the good or service is successfully received by the customer in turn contacts their issuing bank to dispute the charge as fraudulent. Similarly, the merchant is penalized with chargeback fees, lost goods and revenue. Some of the reasons that customers provide to their issuing bank when committing chargeback fraud include denial of receiving product, where they claim that the item was not delivered; fake returns, where customers claim they returned the item but did not receive a refund, or that it was a fraudulent purchase made without their knowledge by a criminal. However, of course, not all friendly frauds committed are intentional. For example, families sharing a credit card may commit friendly fraud when one member makes an online purchase without the knowledge of other family members, while another member later discovers the unrecognized charge and contacts the bank to dispute the charge. Who is affected by online payment fraud? Most evidently, customers fall victim to online payment fraud as they have their card details stolen and have fraudulent purchases made under their account. However, merchants suffer a great burden when dealing with online payment fraud. Merchants not only lose the goods and the cost of the goods, they are also faced with chargeback fees, as well as a penalty that goes towards their chargeback ratio. Acquiring banks are also exposed to certain risks, as they are responsible for returning funds to the issuing bank and cardholder in the case of a chargeback, and are responsible for verifying transactions. Chargeback fees are additional fees that merchants must pay when dealing with chargebacks. These fees are assessed by the merchant's acquiring bank and are used to cover chargeback-related costs accumulated by the acquirer. Chargeback fees can be quite high. It was reported in 2018, the average cost for chargeback was $2.94 for every dollar that was lost to chargeback fraud. This would mean that for a transaction amount of $100, the chargeback fee would cost merchants approximately $294. An industry with a high rate of online payment fraud is the subscription industry. This industry incurs a high rate of chargeback because it is predominantly a card-dependent service. Often customers sign up for an online subscription or a free trial, where their card is automatically debited after a certain period. They either don't want to pay for the subscription anymore, or have simply forgotten about the automatic direct debiting. cardholders will contact issuing banks claiming their card was used without their knowledge, instead of admitting that they forgot about the subscription. Moreover, these sites are often used by fraudsters to test cards, meaning that if card details were incorrect, an authorization error would notify the fraudster. Accra is a service provider offering affordable payment gateway service. We can approve your merchant account in less than 24 hours. Contact us if you are interested in knowing more.